Okay, recording this video on Sunday, the 17th of July 2022. It's just gone 2:49 a.m. Chicago time. Do hope you are doing well, and I hope I am not overwhelming you with videos this weekend. This is the second video from me. First one I did a few hours ago was on the BT hat signal. So this is the big things happen at triples signal that we've had on the E-mini daily and 135-minute charts. It was a quick little video, but I was just talking about the importance of some support levels that came in on Friday and could lead to a nice kind of change in trend in the E-mini. But this video is the weekend futures market recap, where I go through 15 of the largest futures market and show you what happened last week and what I'm seeing on my charts. So these are the 15 markets, all kind of squished up on this screen size, but on a big screen all looks kind of pretty good. We've got our futures contract on the left hand side, I beg your pardon. We've got our forex contracts on the left hand side. We've got the euro, British pound, Aussie dollar and Japanese yen. Then we've got the two largest financial markets. We've got the E-mini and the 10-year notes. Then we've got our precious metals with gold and silver, and then Bitcoin, which you can consider as e-gold maybe. And then we've got our commodities on the right hand side. We've got the energy complex here with crude and natural gas. We've got our industrial commodities represented with copper, and then the ag commodities with corn, soybeans and wheat. So last week was one heck of a week. We had some really big things happen, and compared to the week before, where I held one trade the entire week, last week I was jumping around like a Mexican jumping bean. I was in and out of this and that because we had so much kind of happening. So let me try and go through kind of the story of last week, because there were three major things that happened. First of all, we had the weakness on Sunday night, and we had the gap ups in the ag commodities. Then on Wednesday we had the super high kind of hot CPI number came out, which affected particularly the E-mini and the 10-year notes. And then on Thursday we had the parity in the euro, which turned everything around. All the major markets kind of turned on a dime when the parity kind of trade was made. So let's start at the beginning of the week with the E-mini and how that kind of weakened. So let's squeeze this up here. So this is 13,500 tip bar chart. At the end of last week we'd had a really nice seasonal rally in the E-mini, and the seasonal trade actually runs out at the end of the July 4th weekend. So the question was, were we going to punch through 3,900 and keep the party going? And the answer was no. We'd already had on the Sunday a couple of weak signals. We got short signals here on triple signals kind of go off. So this is where the three non-correlated indicators come together, and I call it a triple signal. We get price signals from better sine waves because the market is overbought. That's the background in gray. We have momentum signals that have gone to an exhaustion pattern followed by divergence, and that's exhaustion buy here with bearish divergence comes in, signaling a potential top. And then thirdly, we've got professional activity active at the highs, kind of taking profits or kind of legging out of trades. And we had the better pro-am indicator broken. So we had this kind of little kind of zigzag line in better pro-am because the blue professional bars at those highs, the lows of that got broken. So we had some triple signals kind of come out. So first thing, Sunday evening, dumped my long E-mini trade and just kind of got flat on the E-mini. Actually ended up shorting the crude market instead of shorting the E-mini. But you can see the E-mini spent the first half of the week kind of in decline. Wednesday was a crazy day. At I think 7:30 in the morning we had the CPI numbers came out. We had this amazing kind of bar here where we kind of jumped up to 3800s or so, and then within 15 minutes we were down at 3700s kind of down here. So a big like 100 plus kind of move within a few minutes as that kind of number kind of came out. And then, as we tend to do with kind of big ranges like that, we kind of come back to test underneath the kind of high of those that big range bar, and then we got our weakness. Blue professional bars kind of come in and we sell it down. So at the end of the week I had some nice E-mini short trades, but this is the bottom that was made, and everything kind of went off at the same time, as I said earlier, with when the euro hit parity everything kind of turned around and the E-mini kind of bottomed here and rallied strongly for the next 2 days or day and a half. So the question is the bottom in? Because we have not seen blue professional bars. Yep, we got some signals at the end of the week, but we've got no blue professional bars kind of down here at the lows. 3800, they seem to kind of gather themselves here, ready for a breakout above that kind of gathering pattern, bang, and the strength has just kept on going. So we need to see that kind of continue next week. I think that's going to be the case because I think the BT hat, the big things happen at triples signal is important. So I think we're going to see strength during the week. Question is, are we going to have some weakness before we then set off to the upside? Because we're not seeing blue professional bars, and you'll see this on a whole bunch of charts that I'm going to show you today, that these lows were not made with blue professional bars at the lows there, and so I'm wary when we see blue professional bars kind of coming in that they're going to kind of take profits, jam it down, and then they'll come in somewhere midway between this kind of low and this high. So that's a possibility for next week. So we'll wait and see. Sunday, Monday is going to be key. If it just kind of keeps on blasting off, then we've just got to kind of run with it. So as you can see, my charts are all kind of messed up here because of these. There we go. TradeStation 10, a little bit glitchy when it comes to resizing windows. I don't know what's going on there, but I'm often finding that this little square does not appear on that chart. Anyway, so there's the E-mini, and then this is the 10-year notes again, which was impacted by the CPI number. We had kind of huge volatility on that Wednesday. Here we go, bang, where they kind of pushed it down. We had signals at the end of last week into the beginning of next week with a long signal there, and with that activity with the CPI number kind of came in, we drove it down, came back up to the top of that range, and then they pushed it down. But what they did do at the end of last week was blue professional bars stepped in with exhaustion sell. We've had bullish divergence, so we've had another couple of triple signals kind of go off on the Thursday into Friday there. So 10 years is looking good. Obviously we need to kind of punch above 119 or whatever the level is here, 119 even I think, and that'll show that this rally's kind of on its way, and bonds will be rising in anticipation of the Fed cutting rates at some point. So it's kind of counterintuitive given all the news that you hear, but if you kind of listen on the edges to some of the economic kind of forecasters, they're saying that the Fed's gone too far too fast, and we're actually going to have to see rate decreases kind of at some time in the future, nearish future. Anyway, so there we go. So that's the 10-year pattern going on there. Let's talk about the ags, because on Sunday evening we did have this kind of gap up on the ags, and it was fierce. So here we go. This is corn, gapped up on the Sunday, and it just lost it. We had exhaustion buy, bearish divergence, and it kind of fell back. Now you'll see this on all the ags. So that is corn. This is soybeans. Same thing. Sunday kind of gaps up and kind of drops off. No blue professional bars at the lows here. So we didn't have a proper kind of bottom being made. And here's wheat, same thing. There's the gap up on Sunday. Some blue professional bars, but none at the absolute lows, and all of those have weakened. And I did talk in last week's video about this was kind of a technical rally off previous support level here. So here's the corn chart, long-term daily chart. And you can see we were bouncing off this technical support level, which had been a gathering pattern. Blue professional bars had stepped in, and we'd had these kind of monster rallies in the ag commodities at the end of beginning of this year, and that was just showing that it was a technical bounce off there, and it wasn't a change in trend. We didn't have any blue professional bars. If the blue professional bars had stepped in there, that would have shown me that at least that we've got proper professional support for this rally, and we'd have kept on going. So all it was doing was driving off that number and then faking people out with a gap up on that Sunday evening, and they were getting out, and we've had weakness ever since. So that's the corn chart. This is the soybeans chart, kind of same thing. It was off this blue area of blue professional bars, kind of gathering pattern here. We didn't have blue professional bars kind of coming at the lows, and so they kind of moved that up. We're still holding in that area on soybeans, which is interesting, and I'll show you the tip bar chart on soybeans in a second. And then here is the daily chart on wheat, and there we go. That was the kind of support level in just below those blue professional bars. Technical bounce off there, didn't have professional support because there was no blue professional bar there. We've weakened, and we've actually on this long-term chart actually signaled a triple signal short. But let's just go back to the soybeans chart, because that's the one that looks a little bit stronger than the rest, because we've had exhaustion, sell, bullish divergence, blue professional bars kind of come in here and come in here. If we break above this 1365, that'll be a triple, because we've got oversold on better sine wave, price based. We've got exhaustion, sell, bullish divergence on better momentum, which is volume based, and we've got blue professional bars kind of coming in here at the lows. So we've got the professional average trade size being bumped up because the professionals are kind of active here. We didn't have blue professional bars at this low here, but when we've come back down into this area, the blue professional bars have kind of stepped in. So it's interesting. Not quite at the lows, so it's not totally convincing, but there's a lot kind of going on here that would say potentially in soybeans is going to maybe diverge from wheat and corn and give us a rallying pattern there. So that was the E-mini 10 years, and we got the ags. Let's talk about crude. So crude, we have beautiful signals here on into Sunday. We had triple signals, exhaustion buy, bearish divergence, overbought, blue professional bars get broken on the lows, bang into a downtrend. And so we had some nice short crude trades. Yep, so short crude on Monday and Tuesday. So it kept on going down. At the end of the week, we did kind of hit, what is that, 88 at the bottom there. And we've kind of bounced, and this is this pattern that you'll see on a whole bunch of charts this week, is that there's no blue professional bars. This was the euro parity trade about an hour after or so. Crude kind of bounced from there because everything was bouncing. And what we've come into is blue professional bars here. We don't have exhaustion sell. Yes, it's oversold, but no blue professional bars at those lows, no exhaustion sell or bullish divergence at their lows. So I'm very wary of crude at these levels. So if we start breaking down, I think we'll get reverse. Well, we don't get reversal signals because we don't have it overbought at this point. We could play with people, toy with people over the next couple of days and kind of push a little bit higher and then kind of come down again. But for me, that doesn't really do it in terms of a proper bottom in crude, because there's no blue professional bars at the low. And while we're at it, let's talk about the forex contracts, because they're showing kind of the same thing. And I'm just wary that a bottom has actually not been put in this market. So this is parity on so there we go, the low, exactly 1 even euro versus US dollar. And again, just like those ag charts, it's a technically incredibly important support level, and we had a technical bounce at it. But at those lows, we don't have exhaustion sell. We don't have blue professional bars. Yes, it's oversold, but for me that's like a technical rally, and we've come up into blue professional bars here. So we could continue to break down and test parity again. We could move a little bit higher, have some more blue professional bars and come down a little bit later. But for me, that doesn't quite do it. I know there was a lot of volume kind of went through at parity, but we didn't have professional size down there. Here's British pound, similar thing, although one blue professional bar happened at that kind of parity low, and we kind of rallied from there. I know at the beginning of the week I was saying that the pound was kind of the strongest of the lot, but it signaled a short signal, triple, kind of at the beginning of the week, and it's just kind of weakened. We've had blue professional bars at the highs here, high, 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 so it's not great on pound. And the Aussie, same thing. Here's that euro parity low, no blue professional bars, no exhaustion sell. We've come back up to bounce off a pro line, trailing the stop down with blue professional bars. We tend to stair step down off these there and there. Last signal at the end of last week was short, triple short, so not looking good. Now, having said that, I'm actually holding a long Japanese yen position taken on Thursday. Yen's just slowly kind of creeping up. Yes, we have exhaustion sell and oversold, but no blue professional bars are that low. So as soon as the market opens on Sunday, I'll just be watching that like a hawk, because I don't know, at some point there will be a big short covering rally on the Japanese yen, because it's everybody's favorite trade right now, just to short the yen. So every time blue professional bars kind of step in, they're selling it down and so on. So let's hope that I've not made a bad mistake there on Japanese yen. But for me, these forex contracts, they just don't make sense at the moment. And the technical bounce that we had could easily just give way and kind of test the lows. So natural gas has always been strong. We had these fabulous signals kind of 2 weeks ago, kept on rallying. At the beginning of the week we had some weakness here, but there wasn't a whole bunch of blue professional bars kind of taking profits. The professionals stepped back in again. We rallied up through the trailing pro line after dumping a whole lot of volume here, getting people short and scared out, and then we continued to rally into exhaustion buy and blue professional bars. So let's wait and see. With natural gas, that's kind of the strongest. Got weak crude but strong natural gas. Copper, I was hoping, well, I was saying that we had these signals, but we needed to get through 360. I talked about that in the last video, that would show kind of confirmation, and we didn't. We weakened, dropped through the lows, bang, went the other way. So kind of weak on copper, no signals there at the moment. Yeah, gold and silver, Bitcoin. So gold, not been happy with gold at all. There've been no signals to kind of go long. We've got no exhaustion sell. We've got some blue professional bars kind of stepping in, but we continue to just kind of move down and down. There's a lot of toing and froing down here at 1700. It's a big number. So let's wait and see if we get a break up through 1730 with blue professional bars or something there to hold gold this week, but nothing there. Silver, we did have some strength in silver, but it just kind of gave way. Exhaustion buy, bearish divergence, and we just sank away. We never were able to keep the rally going, so we've kind of come back down. Again, this euro parity kind of low on Thursday was an important low for silver gold. We kind of rallied from there, but again, no blue professional bars, no exhaustion sell. So I wonder if this is just a little bit of fake out on all these charts for traders, and they kind of get positioned incorrectly. So Bitcoin has been up and down and up and down. We had the 2100 number. When I go back to last weekend's video, talked about we had weakness. We had all these blue professional bars kind of going into these highs. The 2100 number would have to hold on the way down. It did not. We had blue professional bars kind of step in at 20.5, and then we kept on going. We had some blue professional bars from here and rallied. So it's not convincing for me. There's not enough kind of blue professional bars to show me what is going on, and we're just kind of being traded in these pretty large ranges, kind of 19,000 to 22,000, which is good for kind of traders on smaller time frames, but on these higher time frames there's just no signals kind of going off to show you which way the market ought to be moving. So there we go. We've done all the forex, we've done 10-year, we've done E-mini, we've done precious metals, we've done Bitcoin, we've done the energy complex, copper, and the ags. So it's a big week for me going forward this week. The question becomes, will that low that was put in with the euro parity Thursday kind of rally since then turn out to be a fake rally, and that the professionals will step in and push it down again, and that'll affect a whole bunch of those charts I've shown you today, where we'll kind of push down into those lows. So it's going to be an interesting week kind of going forward. Hope you trade it well, and maybe put out a video kind of midweek with an answer to that question.